Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top events that are expected to be moving prices. Also, we'll be doing some technical analysis to try and understand where the market structure or what it's showing and where the opportunities might be. So as always, this is not an investment advice. It's not a recommendation to trade. So you should always do your own due diligence and practice proper risk management. So as you have noted from my background, today I'm having some issues with electricity. Kenya Power decided to do the thing, but all the more we found a unique solution. But at the same time, because I'm running on batteries, this might be a much shorter presentation compared to prior days. So hello, Paul Kerry, and shout out for being the first person to join and say hi on the comment section. I can see Margaret Para in the house, Morris, Matilda, there's Maureen, Boniface, Dennis Mwangi, DJ Diko. Thank you guys for joining. You can see Thomas Mashuma in the house. So let's get things started right away. So from what we have on the economic calendar, there is quite a number of things going on. One is the Australian CPI, which is a measure of inflation year over year, which came in at 2.4%. This was better than the expected number, which was 2.5%, meaning that inflation is slowing down better than expected. So on the other hand, we had UK CPI coming in at 10 a.m. It also came in better than expected. We saw 2.8% annual inflation, which was lower than the projected 3%, and of course lower than the previous reading, which was 2.8%. So this is much progress in the right direction. Remember, the Bank of England is looking to push inflation towards the 2% target, which would allow them to continue cutting rates, and that would be negative for the UK pound, something that we had already discussed yesterday. So as for the core CPI, we expected 3.6% in the UK. Instead, we got 3.5%, much lower than the projected number and lower than the previous reading of 3.7%. So even the retail price index was down to 3.4%, compared to the expectation of 3.5% and the previous reading of 3.6%, indicating that prices are moving according to projections by the Bank of England. In this case, it would give them more leeway to consider implementing rate cuts. So as for the rest of the day, we'll be looking at the annual budget release from the UK. This is tentative. We don't have a very specific point in time, but it's happening right from now, somewhere around 1 p.m. Then in the afternoon, we'll be having core durable goods orders as well as durable goods orders from the US. So these will basically be a measure of business activity within the US economy. And of course, if there is an increase in durable goods orders as well as core durable goods orders, that should be positive for the US dollar. If there's a decrease, then negative for the dollar. So later on at 5:30 p.m., we'll be looking at crude oil inventories, which is a measure of US oil stocks. So in this case, we're expecting a slight slowdown to 1.5 million compared to the 1.7 million reported in the prior week. So if there is an increase higher than 1.5 million, it means that stocks are increasing. That should be negative for oil prices. But then if there's a drop, scarcity brings value. A drop in inventories would basically mean that oil prices increase. So we also be getting FOMC member speeches, one from Kashkari and the other one from Musalem. So first speech will be at 5 p.m. and the other one will be at 8:10 p.m. So towards the end of the day, we'll be looking at the Bank of Canada summary of deliberations. This will show the minutes of the previous meeting at 8:30 p.m. So this could be a potential mover for the Canadian dollar. So as we head into Thursday, tomorrow we'll be focusing mainly on the US GDP, unemployment claims, final GDP price index, as well as pending home sales all in the afternoon. So this will be the main mover in the markets on Thursday, with Friday being a day where we focus on UK retail sales and Canadian GDP, as well as the Fed's favorite measure of inflation, which is the core PCE price index. So as of this morning, the main news was UK inflation cools unexpectedly in bone for ifs and rate cuts. So UK inflation unexpectedly cooled, strengthening the case for the Bank of England to cut interest rates again in May, providing a morale boost for Chancellor of the Exchequer Rachel Reeves ahead of a key economic statement on Wednesday. So consumer prices climbed 2.8% in February from an year earlier, slowing from 3% the prior month. So the Office for National Statistics said it was below the 3% economists were expecting on average and in line with the 2.8% predicted by the Bank of England last month. Clothing prices were the biggest driver of the slowdown, while goods price inflation also eased. The ONS said the pound extended losses falling as much as 0.2% to 1.2918. Money markets added to rate cut bets and now see a 75% chance of a reduction in May. And this is the key point here. So now that inflation is moving as the Bank of England expected, then there's a much higher chance of a rate cut on the next meeting, and this next meeting will be in May. So 75% chance means that we will likely see the pound sliding against the dollar over the course of the next few weeks. The figures come hours before the Chancellor unveils her highly anticipated spring statement, in which she is expected to slash government spending, to put the public finances back on track, and downgrade growth forecasts made less than 6 months ago. So Rachel Reeves has argued that by sticking to her fiscal rules, she has brought the stability needed for the Bank of England to cut interest rates and bring down mortgage costs for millions of Britons. So both the Bank of England and the Chancellor will be somewhat relieved by the drop in headline inflation, said Luca Bartholomew, Deputy Chief Economist at Aberdeen. Slightly lower inflation should also mean less pressure on gilt yields, which means a major concern for the Chancellor. So Chief Secretary of the Treasury, Darren Jones, said in a statement, our number one mission is kickstarting growth to raise living standards for working people. That's why we are protecting working people's pay slips from higher taxes. So from that, knowing that the biggest news this morning has been from the UK, slower inflation creates a pathway for the Bank of England to cut rates. So with a 75% chance of a rate cut in May, you can see how the markets reacted. So far since the day started, the pound has been the biggest loser in the market, being down 0.36% against the dollar. The yen is still losing to the dollar, it's down 0.2%, whereas the New Zealand dollar and Australian dollar have picked up some pace and made some gains against the US dollar this morning. So as for the week, since the week started, the JPY is still the biggest loser, down 0.61% against the dollar, whereas the Australian dollar, Canadian dollar, and New Zealand dollar have been the main gainers against the US dollar. So month to date, that is since the month started, the US dollar is still the weakest currency. But then the one currency that has gained the most is still the euro, which is up 4% against the dollar. So the pound also a few days ago was just second to the euro. It had gained quite a significant percentage. But now that we are seeing the pound lose, and now the remaining gain since the year started is, since the month started is at 2.56%. So as for the stock market and its performance yesterday, there was quite a shift. We all remember what had happened on Monday. There was a very strong recovery in US stocks. So yesterday was somewhat green, but not every other stock. So overall, we had some amazing performance from companies such as Tesla, which was up 3.5%, and Netflix was up 2.6%. We saw some tech companies making some gains, such as Adobe, which was up 2.33%, CrowdStrike being up 3.3%, but overall a mild gain for the day. So today we'll be looking at the continuation of the stock market recovery. So I'll be analyzing that on the next part of the presentation today. So if you have any questions relating to the presentation, feel free to raise them in the comment section, and I'll be responding to those questions as we go. So kindly give me a sec. So the next part of the presentation is where we do some analysis on the MetaTrader 5 trading application. So from what you can see, this is the movement on the pound this morning. And this is after they announced the CPI data earlier this morning. So far, we have seen the market open slightly bullish, but then eventually drop massively as a result of the drop, better than expected drop in inflation. So we have already hit the lowest price that we saw yesterday, which was Tuesday. So also the lowest price that we saw on Monday has also been hit, and now the market is potentially looking at last Friday's low. So whenever you look at a market that is trading like this, we know that some pullbacks may be necessary, and we could be seeing some pullback happening on Friday's low. But then, as for now, it remains extremely bearish for pound USD, given the surprise news we saw with the inflation report. However, on the long term, if you look at the 4-hour chart, the pound was pretty strong against the dollar for quite a number of weeks. I would say 9 or 10 weeks. We've had the pound gaining against the dollar. And now that the dollar is regaining some strength and economic news are indicating weakness for the pound, we are seeing the market pulling back downwards. So far, the lowest price we could be expecting is a retest of this area here, a low that we experienced in the last 2 weeks. So from the 1-hour time frame, there's still more room for bearish momentum. Perhaps if there's some form of liquidity grab here for last Friday's low, then we could be seeing the market going to around 1.28863 price action level. So outside of that, we have seen gold being on a pullback despite being one of the strongest bullish markets since the year started. So clearly, the market was in this pullback for at least 4 days before it made a breakout towards the upper side yesterday, forming yet another new high. So the high yesterday was much higher than Monday, and now we can see what is happening here. So market makes a breakout and then pulls back to the same trend line, attempts to go up, pulls back to the same trend line, retesting twice, and then making a strong rally towards the upper side, which basically indicates a likely momentum towards the upper side. And now that we have a clean break, we could be seeing gold pacing towards a new all-time high, somewhere around 3,056. So in this case, the overall expectation is that gold keeps on moving higher and potentially gets to the previous high. So for now, it's really struggling to break yesterday's high as well as Monday's high. So that may explain the pullback we are seeing, but the overall sentiment and momentum implies that there is a very strong participation by bulls here, especially from what happened in the Tokyo session. So as for the UK equities, we have had US equities, we have had 3 consecutive days of bullish momentum. So you can already see it here. So we managed to grow to close a gap that was existing in this area here. And now we are looking at signs of a likely continuation of the bullish momentum. So on a smaller time frame, if you go to the 4-hour chart, you'll notice that it has been a very strong push towards the upper side. And knowing that we already had a channel playing out here. So this was the channel somewhere around this area here, and that the market broke above that channel, then there's a good chance that we see a continuation of the same today. So from the 1-hour time frame, this is how it looks like. So if I have to adjust my trend line here, then I would have to connect with the most recent highs and make sure it makes sense. So now we are seeing the market stagnating this morning as it attempts to move even higher. So far this morning, during the Sydney and Tokyo sessions, we haven't had much of a price action. And this is kind of similar with what we experienced yesterday in the morning. So during the Sydney and Tokyo sessions, nothing much. But eventually from the London session, there was bullish momentum. And then later on in the New York, we managed to close on a high. So this could be the same playbook happening today as the market pulls back for a while, forms a low during the Asian session near the London Open, and then we see a continuation higher. So I expect things to be the same also for the SP 500, which has also broken out towards the upper side. So this is what we are seeing on the SP 500. So most likely we could be seeing the market proceeding higher. So from the daily time frame, you can already see it's a very strong market recovery. So after the market dropping more than 10% in the past couple of weeks, here we are looking at a 4.835% gain within a span of a few days. So this implies that we could be seeing some far more upside happening in the SP 500 index. So although things may have slowed down from yesterday, today we could be seeing a boost in momentum ahead of the US GDP data, which is coming up tomorrow. So as for the US 30 or the Dow Jones index, also we are seeing signs of the same. So despite the Nasdaq making an impressive recovery for the past 2 days, I would say that the overall direction in the Dow has been more of a sideways momentum. But then if you look at the higher time frames, H1, H4, as well as D1, it's a market that is really making a push towards recovery. Having made 5 consecutive green days, today could also be an extension of the same as the market looks to recover from the big sell-off that we experienced a couple of weeks ago, where the market was literally down 9.84%, but then it has erased some of those losses. And right now we can say it's down 5.57%, meaning that it has recovered more than 4% of the earlier losses. So clearly some positive momentum is happening in US equities. We should be expecting to see more along the same. So as for Brent oil, we projected a much higher price action yesterday. So we had a pullback and then the market bounced strongly. So the pullback happened during the New York session. Very sharp drop towards the previous high of $72.001 per barrel, and then a strong bounce. And then today we are looking at a potential continuation of the bullish momentum. Of course, we have this area on our site as the new target. So it was the high that we experienced over 3 weeks ago. And now that the market has been pushing towards recovery, then there's a good chance that we see the market jumping to around $73.521 per barrel. However, also remember we have crude oil inventories data coming up today, and if we see a spike in inventory, then we could also see the market retesting yesterday's low. However, if crude oil inventories are basically becoming scarce, then value will move the price higher, and more likely we get to $73.521 per barrel. So as for the major pairs, if you look at the USD trading against the Swiss franc, it has been more of a fight since the week started. So it's a completely neutral market. I would say this is a market that has been moving sideways, and clearly swings up, swings down, down, up, down, up. This has been the story of the week, and now we are getting back to the same area where the market has been looking for opportunities to short. So we'll be observing this area for a potential breakout. In this case, a strong dollar might break out and we see opportunities to buy. But then if we see sellers coming back into the market, then the idea is to short and target the lower side of the range, as the market seems to be completely neutral. So on the other hand, we have seen Bitcoin make an impressive recovery. So far as of today, it's trading at $88,000 per Bitcoin. So from the forward chart, you can already see it's a slow progression to recovery. And now looking at the last 2 weeks, we have already broken above the high of the last 2 weeks, which makes it likely that we could be headed to this prior high, which was about 2.5 weeks ago. So now looking at a potential bullish momentum, and given the strong recovery in US equities, then good chance that the market pushes to $92,808 per Bitcoin towards the end of the week. So New Zealand USD making an impressive recovery this morning. So yesterday it really struggled to form a new low, and now we are seeing the exact opposite happening. So the most recent high that we have seen in New Zealand USD seems to be around 0.57624. So we could be seeing the market progressing to that area. So it's slightly higher on the 15 minutes chart. So we could be seeing an extension of this since we already broke yesterday's high as well as Monday's high. And now the market is likely poised to move higher and get to 0.57647, where we could be seeing more liquidity in the markets. So we have already covered pound USD, which is the biggest mover this morning. So for USD CAD, we talked about the eventual break of this support area here. So from the forward chart, this is how it looks like. So we are looking at a market that is really struggling to break this support area. So far, the Canadian dollar seems to be pretty strong and insisting on breaking below the low of last week. So if you happen to break below the low of last week, then the prior week's low becomes the new target. And now we are looking at a market that has already attempted to do that. So here we'll be observing the price action, especially during this London session, to see if there's a reversal of some kind. If we see evidence of buyers coming back in, then the idea will be to trade higher. But then there's no much room for trading higher. Don't expect the market to go all the way up. Chances are it will be a small bounce and the market perhaps gets to this upper trend line here. However, if that doesn't happen, then we could be looking at a straight out breakout towards the lower side with targets all the way down. In this case, looking at price action levels all the way down to around 1.41809, which was the lowest price that we saw 4 weeks ago. So as for Euro USD, we are seeing a slow decline given that we had this double top formation. And now that we broke towards the lower side, the market is struggling to move lower. And now if you go to a smaller time frame, say the 15 minutes chart, you'd notice the regular pattern we are seeing here. And this is from the sequence of lows in the market. So the sequence of lows were indicating that the market is going for lower lows. And now, if you compare the previous lows with what's recently happening, especially on Monday and Tuesday, it's a market that was forming lower lows. But then, given today's price action, we are seeing the market failing to form a lower low. So this is the lowest price, same as yesterday's low. And now the market is bouncing off strongly, which basically implies that now we could be headed for yesterday's high, having seen the market bounce strongly from this low. So potentially running and getting to 1.08299 price action level. So as for USDN, clearly the dollar has been really gaining against the yen. So we had targets on the previous high here. So the market got really close, but did not break that area here. And from what we are looking at here, it's more like we have an inverted head and shoulder pattern. So if I had to plot it for you guys to visualize it, this is what we are looking at. So it's a market that was attempting to change the direction. So in this case, let's say we have this and didn't quite get to the neckline. And then, of course, we have this basically partially completing the pattern, indicating that the market was really struggling to move above that price action area. So our neckline is at $150.962. So if I go to a smaller time frame, 150.962 yen per dollar. And now we are looking at a very straight up big dip that happened yesterday with the dollar losing to the yen. And then this morning, an attempt to move higher is being met by a very strong selling activity, which implies that the market could still continue with the bearish momentum. So notice that all this is happening on a price action zone that is along this particular trend line. So the trend line was broken earlier in the week, market pulled back and is attempting higher, but now we are looking at a market that is potentially retesting and could push towards the lower side ahead of the US GDP data tomorrow. So now that we are seeing this very strong reversal happening from earlier this morning, then a good chance is that the market gets to retest the Asian low. So the Asian low was at 149.832. So this is what we are seeing as the pullback happening this morning. So as for other equity indices, the UK 100 index made a very important rally after the news announcement. That is the CPI data. But then that rally was wiped out very quickly, and now all the gains have been given back. So from what we are seeing here, clearly it's a market that attempted a bounce and then failed and maintained sideways momentum. So from the forward chart, you can already see it was a very strong bullish market, but now we are seeing a sequence of lows that are indicating a change in the market behavior. So on one side, the lows are getting deeper, and on this other side, the highs are seemingly also getting towards the lower side. So clearly, on the 1 hour chart, it's a market that is struggling to move higher, and now we could be seeing some form of pullback or even a breakout. So clearly, for today, we should be observing the price action around this area here for evidence that sellers are coming back in. And once we see that, then we could be seeing an opportunity to go short. So as for other equity indices, the French stock market index is showing some very strong signs of sell-off. So this is something that doesn't happen every day. But when you see the market dropping with such vigor, then usually it's a panic sell and it leads to further sell-off. So in this case, we should be looking at the market potentially retesting the lows that we saw on Monday. So clearly more of a bearish momentum market. So other European equity indices, if you look at the Spanish stock market index, this one has been quite resilient, but still we are seeing some signs of sellers coming into this market, despite the market being very close to a new all-time high, which is something that was just formed earlier this morning. So we'll be observing this to see signs of continuation or reversal, but we have already seen a sign on one of the European stock market indices, being the French stock market index moving further downwards. So I believe we have covered most of the assets we were looking to cover for the day. So I believe there's one more, the German stock market index. So also for the German stock market index, just grabbed some liquidity here. This was yesterday's high, triggered a lot of orders around this area here. So anyone who went to buy here might be going bust. And now we are seeing a very strong sell-off activity, potentially getting to the London session lows that we saw yesterday. And if we break that, then we could be looking at all the way down to the previous low that we saw yesterday. So with those few comments, remember I had mentioned that I lost my electricity. Now it's back, but my laptop is almost dead. So So apologies for that. So I believe I had given you a fair warning. I didn't have enough power. So thank you everyone for the session. So I would like to give an update on Robert. So today he had some personal business to attend to. Hopefully he'll be back with us by the end of the week or next week. So also we'll be looking to introduce new presenters on the Market Snapshot series. So expect some more activity, some deeper insights from all of us as a team. So hopefully everyone gets to benefit from these sessions. So the one thing I didn't cover was pound yen. I don't know if I can get that. So just checking if I have the chart open. I believe I should be able to have one open. So pound yen, pound yen, pound yen. Okay, we already covered USDN. So for pound yen, pound seems to be the weakest currency in the market as of this morning. And now we are looking at potential price action areas where the market could extend this strong price action. So more likely we could be seeing an extension of the bearish momentum going down to 193.254. So clearly it's so easy to short the pound this morning with a target in this case of around 193.254. So that's it for the day. Enjoy the rest of your day, and I hope to see you on the next session. Hopefully, we won't have any issues with Kenya Power.